Hey, Alexander.
Hey, Gary.
Where are you calling from today, then?
Same place, Lagos, Nigeria.
So, anything of interest happening on your side?
Kind of, not really, but I'm thinking of. I'm thinking of starting an agency with a friend.
Okay.
I am a writer, and my friend is a video editor, motion graphics. So we kind of got into the crypto space recently, and we did get a few clients, a few crypto influencers. So we was DevRels, as they call them. So we were able to get to do some work for some of them, and it was really, really interesting. So
Okay.
we were thinking of making it official and stuff like that. So I've just been thinking about that, thinking about how to go around the whole process. Personally, I really do not like the idea of an agency. I really don't like the word. I like a more
Yeah.
personal approach. I don't know if you get what I'm saying.
I have to say, my experience is that anybody who has the word agent in their title, and I'm probably going to upset a lot of people, generally means that they've got a vested interest in themselves over and above the customers or clients or services that they may
Yeah.
be claiming that they're supporting. So always
Yeah.
always think in terms of like estate agent, travel agents, this kind of thing. So and it looks like we're being joined as well by Neil as well. Hi, Neil.
Yeah, hi.
Well, as I was just saying to Alexander a moment ago, we never quite know where we're going to go with these sessions. Because I don't have a fixed agenda, I don't have a training plan or anything like that. It really is just having conversations with whoever comes along. And so some weeks we may have 8 or 10 people where we're talking about various things. Other weeks it ends up as like almost like a fireside chat with one-to-one type thing. So it's great because it means we get a mixture of people who, some of whom have been in the crypto or the blockchain space for like 10 or so years. So, I've been interested in this area since about 2014. I've been particularly active since about 2016. So I'd consider myself to have about like 10 or so years experience. And I still consider myself a newbie. But I'm still learning. There's always stuff going on. And then we get people who are fresh. They've just heard about, maybe distributed ledger technology or blockchain, or someone mentioned Bitcoin to them and they've come along and it's completely new for them. So it's great because sometimes it means I can share some basic knowledge around things, and other times we've got people who are doing projects where they're more involved in that. So are you actively doing anything, or are you just exploring the whole space at the moment?
I originally, well, still am. I've got a foot still in the renewable sector. That's where I've been active for about 15 years. So the skill sets are on supply chain of custody, making sure that having worked in that area, making sure the product, which is more often than not was biomass or associated products. So you're looking at feedstock. The supply chain of custody was making sure that the production was properly certified, was produced, etc., to meet the necessary requirements of any contract and bills of payment, specifically letters of credit. So dashboard control from the production through to loading onto the vessel or loading into the trucks and delivery to the customers.
Okay.
Having moved away from that more by in terms of networking and how things have developed from there, and with a focus on Asia, I've moved into a consultancy role with a company more involved in the tech side of renewables and a focus on ESG. So they are transferable skills. Scope management, going through 1, 2, and 3, and encouraging and trying to get involved in developing the momentum there for something which is effectively the same sort of thing, but in a different framework. You're looking at your footprint, you're looking at your production, you're looking at your plant, your energy usage, your energy footprint, your relationship with your customers, and the networks of delivery and or receiving goods into your manufacturing facility. So 1, 2, and 3 together as clustered regions can fit together as a transition economy. I mean, there really isn't that big a problem with that if you're looking at it from the point of view of governance rather more than environment, so it was a natural progression. I'm not calling it old school in that sense, but feedstock has a little bit of an image problem, and with the pushback from big corporations and big banks, it's easy enough to transition into the fact that governance is a better focus point, and it gives more control to a commercial environment to work at solving a problem rather than trying to stick a patch on it. That's my view of it. Yeah. Incoterms 2020, I don't know how familiar you are with that, and the shipping industry's review of technology and the type of engines used on ships. You are looking at a technical solution, so reducing sulfur emissions and that sort of thing. But Incoterms 2020 has enabled a lot of people to look at distributive ledgers for payment, and that's where I switched on to that as a geographer. I was looking at, if you're looking at the payment system, effectivizing a solution that can broaden out right across that clustered region. It doesn't matter what sector you're in, what industry you're in, and as it's a mandate with your annual reporting in the UK now to focus on net zero, to reduce your output year on year. That's how I've got in, and understanding the maths of it. Yeah, it's exciting.
Yeah, I think it's a fascinating area as well, because I was involved originally for the first round of the concept around carbon credits and trading and that kind of thing. That was over 10 years ago. That was not a crypto solution. That was a classic working for a commodities trader. And we dealt in oil and metals, and so carbon credits is kind of like a natural extension in some way. Then you start introducing the idea of, well, if you stick it onto a distributed ledger, conceptually at least, that means you've got improved transparency, traceability, all this good stuff. Although what I tended to find is that you find people talk about DLTs and traceability and origination and everything as though it's something that everybody wants. What you actually discover that the people in the industry actually don't necessarily want it, or that they want it when it suits them.
Yeah, that's a grey area. I agree, because I think to some extent you've touched on the fact underneath it all there's a little bit of politics going on, and arguably you could consider that it is a gateway for grey users. I'll put it like that, because of the way in which the system works. I think effectively the way you phrase that indicates that there's a resistance, because it is a democratization. I can see it as a democratization of those commercial payment investing relationships. If somebody wants to tokenize a particular brand, or if they're looking to stablecoin a real world asset, they're looking at the controlling side. They're looking at their management of their asset. Whereas in a banking environment up till now, and venture capital, and how you're raising your money, how long it takes you to raise your money, and what risks are you laying yourself open to in being snapped up by a big fish in a small pond. There's a degree of optimism, but I think maybe there's some skepticism in the cryptocurrency.
Well, I guess bringing it back to the crypto side of things, I'll bring on a couple of others who've joined. Stuart's joined, who's a regular, and Aleph as well. So I just want to say hi to both. Just carrying on with this discussion around the whole traceability and environment and this kind of thing. You look at there was quite an interesting project a few years ago called Tradelens. And Tradelens was very much about trade finance, and as you say, letters of credit and this kind of thing. And it was the whole idea of being able to track and trace product from the quayside onto the ship, and then back off the ship, and having the matching letters of credit and the way bills and everything. But it didn't particularly gain the scale it really needed to, and I think that was down to a few reasons, one of which was that the cost of being part of the project I think was quite high, the other challenge was that you really need everyone in your industry to adopt it as a standard. And I think it was driven by Maersk Shipping, who did some really innovative stuff. But the problem is that it then becomes known as the Maersk Shipping solution, and all the other shipping operators are going, well, I don't really want to be part of one of my competitors' systems.
Agreed.
So it was an interesting one. So I'm not even sure what's happened with that. It seems to have gone a bit quiet for the last few years.
Yeah, there was a little bit of toing and froing.
It's being cancelled.
Is that right?
I agree. I think if you were
the towing one.
Working with SGS or somebody like that, if it was a stipulation in a contract that you were using electronic document transfer, I think the point people missed out on, I think, or still miss out on, is as you said, traceability, a degree of security for a customer to use an agriculture, from the farm to the fork, so to speak. That I think was the objective. If it's branded with a particular shipping company, that is going to be a problem.
Yeah,
I think the essence of a secure distributive ledger from the point of view of transactions, I think that's the focus. However, that's going to get muddied by brand association. We're yet to see big banks moving in, that sort of thing. If you're looking at a parallel with the internet, arguably some of the effectivity that a distributed ledger could give may be being subjected to a bit of pressure because it's potentially a monetized framework. I don't know.
It's one of those things as well, I guess. You take a look at, funny you should say, from farm to fork, because I think that was the term that Wallmart used with one of their projects around traceability of green goods.
Yeah.
So vegetable crops and that kind of thing. And they started off, if I remember correctly, with mangoes of doing that. And they did a really good proof of concept with that, about being able to track and trace mango production right the way from the farm in whichever country it was, through to the entire supply chain and the country and the delivery into the store ultimately. But again, I don't think they've scaled it. I think, again, that was a great technological idea that maybe the customer wasn't that bothered about after all. It was the whole idea that ultimately, as a customer, you can go into a Walmart or as it was in the UK at the time, an Asda, and you could pick up a product off the shelf and you could scan it, and you could find out the absolute provenance of that item, of where it had come from, which farms it had been through, prove it hadn't been through like any dubious countries or wasn't subject to slave labor or anything like that. The concept's great, but it's whether the consumer is sufficiently motivated to support that. There's a lot of people say they are until it costs them more.
Yeah. So moving away from that, would you consider that crypto is a different environment by definition because it's operating on asset management and exchanges? Therefore, you're not looking at as lineal or as an A to B branded chain of custody, so to speak. You're looking at a market rather more than a supply chain framework.
You mean in terms of tracing the traceability of the crypto? Or the asset that
it's an operating environment where it's going to be a different means of exchange and asset management as opposed to, or a change in asset management as opposed to what we have now. As it's a market thing rather more than a management issue.
I've seen it where the challenge becomes, it ends up being a market of markets of products. So if you think about it, I'll try and explain that in simple terms. So if you've got something like Bitcoin, right? So Bitcoin is a cryptocurrency, straightforward, no complexity. There are markets for that, but there are also future markets, spot markets, and variations in that. When you start introducing things like tokenization of real world assets, so like maybe having a token on Ethereum or Solana or whatever, which then represents an underlying asset. So like a physical thing, whether it's like property or a car or fine wine or whatever. First of all, you got the challenge of the governance around the provenance of proving it when it gets on chain in the first place. So it's the whole thing of garbage in, garbage out. So you got the first thing about being able to prove that it really is the item that you're referring to on the chain. But there are ways of generally doing that. But then you've got the thing that you end up with secondary markets coming into being, and you get trading of derivatives of the crypto assets and this kind of thing. And it all starts getting a little bit blurry at that point. Because I always find it interesting. It comes back to what we were saying earlier on about carbon. And I was involved in the original carbon market trading. That once you create something as a financial marketplace with financial incentives to trade, you typically lose the original purpose behind it. So the original purpose of carbon markets was the idea of reducing carbon emissions by offsetting them there. As soon as you make it a tradable commodity, you get trading companies who are good at trading. And they work out financial mechanisms and products and methods and that, which kind of defeat the object of the original goal, you see. And I've certainly seen that on with carbon trading. My thing around things like carbon is that this is where I think net zero is unrealistic and unnecessary. If you want to genuinely reduce carbon, don't go for net zero, go for gross zero. Because net just means you're offsetting something, you're not necessarily actually making a difference. Whereas if you go for gross zero, then that really does mean reducing carbon, if that's what you want to do. So that's my perspective. If we want to go down to the, as you're saying about ESG tracking and that kind of thing, and as you say about the 3 levels on that, I've found some interesting things with that as well. I've done some work around doing the reporting for ESG, because companies now have to put their numbers into the annual report and all this kind of stuff. And you very quickly start carrying the risk of double and triple counting, because I might be working with company A and they're working with company B, so say British Airways or something. And because company A is working with British Airways, and they've worked out what British Airways ESG ratings are and everything, and so they kind of like apportion that into their company reporting. But then company C might also be working with British Airways, and they're also accounting for some stuff. And so you end up with a lot of ESG numbers really is just, it's worse than monopoly money, because it just becomes meaningless. But that's not an area I'm an expert in, although I do some analysis around that kind of stuff. Stuart, I don't know. Good evening. Is this an area you've ever been involved in any way?
Yes, I have,
Yeah.
both in net zero and also in the failure of Tradelens as well. We looked at that very, very seriously. And the biggest problem that they had was IBM does not understand blockchain. They brought out a product called Hyperledger, and there's a lot of resistance to it. It's a very basic blockchain. There's absolutely no composability, so you've got no way of linking things in it. And it was just too basic for Tradelens, just much too basic.
So in fairness, if I understand correctly, Hyperledger is actually part of Linux Foundation.
It's a piece of shit. It's a piece of shit, basically.
It's actually an independent blockchain that IBM supports. It's not actually an IBM product, is it?
Well, they put twists and hooks into it to make it an IBM project.
Yeah, I know they
it's
put
part of Linux.
They put a lot of consultancy effort into doing things for it and with it, which kind of like linked it in with them. So I get that. Yeah.
Yeah. So they had the wrong product, trying to solve the wrong solution or problem. But net zero, I've done a lot in past life with working with architects on net zero in buildings and data centers and so on. And I've got to tell you, it's a waste of time. It's an absolute waste of time. You could save more money just by turning lights off.
Yeah.
And not opening windows. The amount of money or energy that you save, money is related to energy, is net zero. It's not even net zero. It's a fashion. I've got a couple of friends who've written books on net zero, and people have gone away from that in the States. It's a nice thought, but it's just not happening. Same as ESG.
I think both of them are great opportunities for consultants to make a lot of money in.
Yes, that is correct.
Yeah. So, but that's my somewhat jaundiced perspective, unfortunately. Yeah. So
I'd agree with you on that 100%. I've seen it. We've worked the numbers on million square foot office buildings down to data centers, and it really is laughable. And carbon swaps was never, that was just let's set this up and make some money.
Yeah, yeah. Which, in fairness to the previous time that they did that, there were people who made quite a lot of money out of it.
Oh, yeah.
And that then it died away for a few years. So
yeah, because it's not doing anything. What are you doing? And then you've got people who aren't part of it. So you're achieving nothing.
Yeah. So Neil, it sounds like we've got some people have been bitten by this in the past, perhaps. So we'll see where it goes. But it comes down to sometimes you keep repeating something a few times, and eventually something just slightly different happens, and it actually works.
ESG is big in Australia at the moment. But I don't see it in Vietnam. I don't see it in India. I don't see it in China. I don't see it in the States.
It is in the UK at the moment as well. There are various obligations about reporting regulations and what you could put into your company reports and all this kind of stuff.
Right, but look at your government. It's laughable.
I'm not going there.
No, I'm not asking you to go there. I'm saying that right at the moment, the UK is the laughing stock of the world.
I think it's not in a happy place right now. So I'm going to keep out the politics if I can. So
absolutely, keep it technical.
So let's change the direction a little bit. Alexander's back again from Nigeria. So if we want to talk about government initiatives and that kind of thing, I think Nigeria has been quite innovative with some things, and they tried with the e-Naira, but again, I think the challenge with that, if I understand correctly, wasn't necessarily the technology, but the citizens' faith or trust in the system, or the people behind the system. So it's interesting. It comes back to Neil's thing about various ledgers and governance and that. It's not usually the technology that fails. It's the governance or the trust layer, I would say, is the problem. But we'll see. I'm joined by Elena as well. Hello, Elena. Good evening.
Hi. Hello.
You join us where we're kind of just popped through the loop again around traceability, and we're talking about traceability of product on shipping and trade finance and food, and also carbon type emissions and tracking that. Which again, I've seen a couple of projects. I don't know what's happened to them, where they were doing some quite nice stuff, and this would probably fit with what Neil's saying about coming up with quite different ways of measuring the carbon emissions of an organization and then tracking and tracing it to make sure it wasn't double counted and triple counted in that. I'm trying to remember one of the projects I was looking at a while ago. It seems to have disappeared, unfortunately. So yeah, all interesting
because
stuff.
I just wanted to ask what if you have some examples of those projects.
Well, the obvious one on trade finance, as mentioned with Stuart as well, is there was one called Tradelens, and Tradelens was a trade finance tracking project led, I think, by Maersk Shipping. I think on the consultancy side, it may actually have been EY that was heavily involved in it. And as Stuart says, it was on a version of an IBM version of Hyperledger, so a Linux blockchain. And the idea was that you would track and trace content of containers, I think it was down to, going onto ships. So if you take a look at through a supply chain or a distribution system, when a lorry comes to a dockside to deliver goods and they get loaded onto the ship, there's quite often a transfer of ownership at that point when it goes from dockside onto the ship, and there's trade finance about how it's being
when the
funded.
letter of credit.
Letter of credit, sorry, yeah.
Usually.
Yeah.
FOBs.
Yeah, so you got a series of documentation controls and customs checking and all this kind of thing, where you track and trace the goods as they're on the ship. And then depending upon what the product is, so it's interesting, I used to work in the oil industry, and in the oil industry, the actual ownership and the title deed of oil on a ship as it was steaming across the ocean could actually change several times as it was going along. That tends not to happen with like fixed goods, so like toys from China or bikes from Germany or wherever. But what it meant is that when you then get to the destination, you've then got the ability to track and trace the product there, and it means that the insurance proposition changes when it's back on shore and all sorts of stuff. So it's quite interesting. So Tradelens did a load of stuff on that, and they worked with, funnily enough, a number of insurance companies on that. But it didn't end up going anywhere, is probably one way of describing it. And then on the food tracing, Wallmart, who are one of the world's biggest food distribution companies and food sales companies, they did a project which was looking at, they were starting it with what I described, I think, as green food. So lettuce, vegetables, this kind of thing. They actually started it with mangoes, I think it was, where they tracked from the farm that the mango was produced from, in fact, possibly the field it came from, through to the farm's systems, how they put it all together and they packaged it, then how it was sent over the oceans and everything, and eventually to the point where you can actually track and trace that mango onto a shelf in a Wallmart store, or as it was when they were doing it in the UK, it was Asda that they owned. And the whole idea was that you had this complete traceability of the product on that. And there was another interesting UK company called provenance.org. And provenance.org did a similar thing with handbags, if I remember correctly. I think it was a predecessor to Louis Vuitton do this now, I think, about tracking and tracing the production of handbags. Because Louis Vuitton, obviously high-grade product, high reputation, very expensive. They want to be able to prove that the leather has come from a sustainable source, that the actual handbag's been made in a country which is like credible and it's not using sweatshops, that kind of thing. So provenance.org did some stuff around, I think it was handbags tuna fish, believe it or not, because tuna is quite a high value product. And they were trying to do traceability of the fish to prove it was coming from sustainable fishing stocks. So that they again were doing this whole thing of from the point of it coming out of the ocean to the point it got onto like your sushi dish or whatever. So yeah, so there's a few examples. I don't know if anyone's got any others. Everyone's staying quiet, so I'll be the font of all knowledge again on that. So there's a few examples of traceability for you anyway.
Thanks.
Yeah, but it's interesting. It's a little bit like, I think, as we were saying last week, where you've got a lot of projects around real estate and that kind of thing. Most of them seem to disappear after a while. Usually when they either hit reinvestment challenges or funding problems or regulation, and they suddenly discover that things aren't as easy as they'd hoped. I mean, I was involved in a fine arts traceability project years ago of tracking and tracing and using a ledger to trace rare pieces of art that were going up for auction, and effectively having a digital certificate that proved that the artwork was genuine. The problem with that is that a lot of artwork, and the people of the industry will probably quietly admit to this, but a lot of all artwork is fraudulent in the first place. It's surprising how high a percentage, even the stuff that is authenticated at times by qualified people who've analysed it, that they'll admit that a fair percentage of stuff is not actually legitimate. And at times they'll let it go through because it would be more trouble to admit that it's not authentic than it would be just to carry on with the myth that it is. So be very, very wary if you're into fine art, is what I would suggest.
I don't know how I'm gonna live now with this fact, knowing that.
You were just about to buy a new Canaletto, weren't you, or a Rembrandt or something, and now you think, no, Gary's sown this suspicion of doubt. Yeah.
I had a project in Dubai where one of the things that they were trying to do was to buy famous paintings on a fractional basis, on a fractional ownership. That went only so far, and then it just fizzled because people were not seeing a return. It was aimed at the wrong investors.
The thing you discover as well. Go for it, JC.
I was just listening to you guys. That's the thing about fractionizing masterpieces or pieces of art. Yeah, is that you're basically turning that into securities, and there's no way to avoid it at all.
And your point is,
yeah, but majority of people that were investing in that space in fractionalizing whatever, they actually didn't like that. Yeah, so I had these conversations quite a lot in 2020. Start 2020, because I was probably the first platform that wanted to think about fractionalizing masterpieces at that time. And in the end, there was a few problems with it. One, there was no regulations. Everything was ended up. All the lawyers I spoke with, that's going to be a security. And then for securities, you don't have crypto people buying securities. Okay, they just want real basic. So that was one of the problems. The other problem was how you're going to move money. Are you going to actually then move crypto to fiat? Yeah, that was one of the things that was really hard at that time. Now it's easier because majority of the collectors in art space, they don't do crypto. They want money in the bank. Yeah, the owners of the pieces of art, and that's fiat. So the ramp off was incredibly difficult. Nowadays a bit more easy. but the fractionalization is what put off because I spoke with a lot of people with serious amount of money in crypto that were thinking maybe it would be great to bring masterpieces or art in general, and tokenize it, but they were just put off because of tokenization means it will become securities, and they were not able to think about how they want to put their money in securities if they are in crypto. That was pretty much it.
Where were they based?
Sorry?
All these people that you talked to, where were they based?
Different places, some actually in Dubai, some in Singapore, even Chinese people. There was a couple of guys from the US. The ones who were more open, believe it or not, were the Swiss and people from Monaco. Yeah. And that surprised me quite a lot. Yeah. And yes, Gary, you're talking correctly about I learned a lot at the time about the art world. Yes. And even very well-known pieces like what was the Da Vinci one, Salvador Mundi, yes, that I think was MBS that bought it from one of the top two. I can't remember which one it was, one of the top auctioneers, yeah, with all they vetted and all that. It was a real Da Vinci in the end. 1-2 years later, other experts that looked at it again said it was false. That was like a $300-400 million piece. I don't know if you guys remember that. That was crazy. At the time I was like, wow. So yeah, I mean, even the big masterpieces, you can find a lot of this fake stuff, as you said.
I think the other thing, and I think both Stuart and JT were alluding to this as well, the nature and the mindset and the culture of the art sector and crypto, there is an overlap. If you draw a Venn diagram of two circles, there will be an overlap, but for a lot of it, there isn't. And a lot, I was actually surprised at times how uninterested in the art collectors were, which sounds a bit weird. So
not really. Art is a good way of washing money. Yeah. It is the premier way of washing money because you invest in something for 75 million, you keep it for 4 years, you put it back on the market for 130. Not only do you make a profit, you've washed your money.
Yeah.
If you get to that level, JT, then we'll help you out.
Yeah, but not all art is wash money. Come on, we have to be fair here. Okay.
No, I didn't say all art. I said it's one of the known ways of washing money if you're a high net worth individual.
But those people are tracked. Okay, so I mean, they are tracked nowadays. When they do often, then they become.
They're watching
tracked.
you, JT.
Yeah,
I don't want any piece of art. So one of the things that I learned, which is fascinating, is like 80% of all art in the world is on a few vaults in Switzerland.
Mm-hmm.
Okay? And when people buy a piece of art, you basically go there, see that it is there with your own, art expert. If you're buying, you can do that, and then you pay the money you buy it, and it stays there, so it doesn't even move the piece of art. Why? There's a few reasons why. These are really tax-free places, okay? So on every transaction that you do, you don't pay tax on that piece of art, okay? Because it is in a free zone, or free port, whatever you want to call it. Yeah? So people do it often, people that are collectors or investors, that because it's a good thing to invest. If you have money, you invest, you don't pay the tax on a piece of art, and then you will, like you said, 3-4 years later, sell it for a much higher price. Yeah. So it's one of the good things about well-known pieces of art, it only goes up the price. Yeah, so that's one of the reasons. And I think, if I'm not mistaken, there's a few rules that you can actually even bring it to your own home a few times per year, like special occasions. You don't pay tax. So you bring for your birthday, whatever you want. You are authorized to do that. Yeah, you can actually move a piece of art physically a couple of times per year. Otherwise, it has to stay there all the time. So that's how it works, pretty much, for a lot of this art.
It's something, again, it comes back to the point of saying with Neil earlier on, that there are some things that you think, oh, right, blockchain and crypto, this suits really, really well this, because you could introduce traceability there. You could have a token to represent ownership.
Yeah.
You've got complete
Transparency,
traceability.
all of that.
And you think, oh, wow, that's brilliant. Everyone will love that. Until you realize, as Stuart said, that not all fine art trade is for legitimate purposes. And so, I'm aware, going beyond what JT says, of someone going out to Switzerland to inspect a piece of art to then take ownership of it and blah, blah, blah. Well, actually, if you've got a certificate of ownership of a piece of art, that it's in a safe, secured somewhere in Geneva or something, well, that piece of paper, which is like the equivalent of like a bearer bond, and it's a certificate of ownership, actually that can change hands without you even going to Switzerland. And so if you've got a $70 million piece of fine art that everyone agrees it's worth $70 million, and you've got a certificate to say that you own, whoever owns this piece of, or whoever's got this piece of paper owns that 70 million piece of art, then handing that piece of paper over to someone else is a very effective way of transferring $70 million worth of value, in inverted commas, completely off the books, completely untraceable. So not only from a tax point of view, from a regulator point of view, a government point of view, it is one of the ultimate ways of doing financial transfers that are completely off the books, which is why some people like doing it that way.
But those depend what you call off the books, yeah, because pieces of art, valuable pieces of art, I think it's above 10,000 £10,000, I think, in the UK. They have to be registered, okay? So it's not like that anymore because exactly of the AML rules. Yeah. So one of the things, and I think it's a bit unfair to say, yes, of course there is, yes, but like there is in any financial mechanism, there's also people that wash money. For example, I'm going to give a clear example. Many people buy houses, yeah, in different places. It doesn't matter, UK, Spain, Greece, Portugal, whatever, yeah. They buy through offshore companies. So then you have these holiday homes or whatever, villas and farms, whatever, in offshore companies. So, and they do it in a specific way, 2, 3, 4, 5, depending where the property is. For example, let's say in Malaga, someone buys 4 or 5 properties, invest, but buys in the name of an offshore company in Gibraltar, for example, yeah. Then what they do is they will sell the actually company to someone else. 3, 4 years later.
In London as well.
Of course. So all of these, happens all the time, and that's how people move money around. Now, it's unfair to say, oh, art this, art that, because it happens everywhere. That's why a lot of the lawyers have set up all of these mechanisms across. London got the name of Londongrad for a reason, and it's just how it is. They move money around between offshore, London, Paris. People avoid New York now, but it's been happening for decades. It's nothing new.
Yeah. I will just quickly throw in my standard rider that this is not anti-money laundering advice.
Yeah, of course not. But it's unfair to say it's crypto and it's art because it happens everywhere. The fact is, blockchain analysis reports comes always at, oh yes, crypto is only 0.02% of all the money laundering in the world.
Mm.
It's a fact.
Mhm.
I mean, there's no even a discussion about that, So, yeah, we
So
need to be
JT, are
careful.
you going to tell us how you launder the money? What's the best way?
I'm just discussing because you guys was talking about that. To be fair, I just it's an observation that I hear all the time, and
I
it's
thought you had some good
reality.
advice.
You have good advice. You've been living
No,
everywhere, so you must have a good advice.
I own my property in offshore companies as well. But yeah,
I mean, there's a lot
we
of
won't go
lawyers
there.
in London that can advise you how to do that. I don't know. To be truly
That-
frank, I don't know, Stuart.
No, it's very, very easy. And the UK government brought in a tax which is higher for properties that are held by limited companies, even if they're offshore. So they're trying to get you that way. But if I sell an offshore company, there's no record of it in the UK.
Mm.
If XYZ company owns, whatever, then the ownership of XYZ company, you'd have nominees anyway, like in Panama, and it would still be the same nominees. So UK government doesn't get to see the tax or anything.
It's interesting that talking of tax and just applying to the UK for a moment. The latest budgets this week in the UK has re-emphasised some regulation they're introducing around the obligation to report crypto trading by crypto trading organisations, so the exchanges and that kind of thing, which is curious because there's hardly any exchanges left in the UK now. But yeah, I think they're placing further obligations on any exchanges that are trading with UK people to maintain records of who those people are and what the trades were and everything, which I think the general consensus in the industry is there's access to that kind of information already. That this just kind of formalizes it. So interesting. Right, we've only got 10 minutes left. We've now worked out new and interesting ways of moving funds around the world, or rather haven't. We've touched on fine art, food, mangoes. We didn't get to talk about wine because I know there's been some fine wine projects around that as well, but similar concept. Anything else happening in the last 10 minutes? Anything?
One of the things. One of the things is I'm waiting to hear what Michael Saylor is going to announce tomorrow.
Okay.
Some people are saying, they're going to announce they're going to sell Bitcoin. I'm saying, I doubt it, but it's super interesting. They were supposed, I think, to do an announcement today on a Sunday.
I thought the thing I saw was that they said they'd only sell if the net asset value dropped below a certain level or something.
I doubt it. He will sell. He already said that many times he would not sell. And he actually said recently that the Bitcoin 4-year cycle, somebody asked him and he said, if I'm not mistaken, he said, no. But there are a lot of people that think it is, so it's quite interesting, that the timing of it, an announcement, of an announcement, it's super.
Okay.
So I think a lot of things are going to change this month, next month, Something else super interesting is that Visa has partnered with Aqua now in Europe to bring stablecoin settlement.
I saw that in Central Europe, Middle East, and Africa, wasn't it? Specifically.
Yeah, Central and Eastern Europe as well, and Middle East and Africa. So that's super interesting, with Visa, they are seeing ahead of everyone else, in my opinion. So, so those are really a couple of things that I picked up.
The other one I picked up this week was Chinese government confirming that crypto is prohibited, which is funny because they seem to actually announce this about every 12 months or whatever. And it's like everyone goes, oh no, the Chinese government has said crypto is illegal or whatever. It's like, no, they're just confirming what they keep saying every year. And the press pick up on it, and the press try and make a big deal of it. But it's actually nothing new. And all they continue to say is that you can't use it as a currency. You shouldn't be mining it. A couple of other things, I think. But I don't think they've actually come out with anything new. It's just that they're re-emphasizing, as they like to do every so often.
The other thing that I picked it up was, there was a CME blackout, yeah, and many traders came out and said this is clear manipulation. So it was 10 hours. They froze the market.
What exchange was that on? Sorry,
CME.
Okay.
Chicago Mercantile Exchange.
Yeah. Okay.
So, it was very, very interesting. Everybody coming out.
That was a data center outage.
Yeah.
Okay.
Everybody started to come out, manipulation. Because the way it's the timing always,
Is that a bit like when the crypto market's getting a bit hazy? It used to be certainly that you couldn't access your crypto accounts.
I mean, look, it's the same when they happened the crash last month. Yeah, when 20 billion were wiped out, a lot of people were trying to close their positions, and the APIs, were not working. So a lot of these bots that are out there trading, I mean, there was a lot of people just lost pretty much everything because they couldn't close the positions.
Okay. I'm going to throw in a completely far out left-wing one here of a piece of news, and it's a very tenuous link to crypto indeed, which is the announcement by Airbus this week. I don't know if people are aware that Airbus issued a directive on their A320s that they needed to do a software downgrade, take it back to a previous version, or a hardware upgrade. And it was because of a near accident that happened a few weeks ago. I think it was with a WestJet A320, which remarkably was traced down to sunspot activity. So this is what was really, really interesting, that they reckoned that there was some sort of sunspot activity that created an ultra rare event, which the hardware on board the Airbus A320, I think it was the engine management, the FADEC stuff, it basically flipped a bit in its memory. And so it sent an invalid command out to the engines. So I just thought that interesting for a moment, of a sudden acknowledgement that solar activity can affect computers on airplanes.
Of course.
Which conceptually means that unless things are like hardened against EMC, is it EMC?
Yeah, but need to have everything
EMP.
Faraday.
Yeah,
everything needs to go into Faraday cages.
Yeah,
because there's going to be more and more solar activity. So,
well, that was my thing. So I was kind of curious what the impact is going to be on Bitcoin mining, because ultimately, or any other cryptocurrency mining for that matter, that potentially there's no reason why those computers, unless they are EMP hardened, they could also be susceptible to solar activity. And anyone who's aware of there's a concept called the Carrington effect, which came about from an event that happened, I think it was in Canada in the 1800s, where there was a massive amount of sunspot activity that wiped out some of the telegraph services and that, which was the technology of the day. The same could happen with computers. So I'm just kind of curious if there's going to be a Carrington effect on crypto and blockchains at some point. So.
No, I don't think it will. But anyway, I forgot to tell you something else. I don't know if you saw this, but Kazakhstan Central Bank put a plan to invest up to 300 million in cryptocurrency assets. And I was like, what? Kazakhstan is actually they do quite a lot of Bitcoin mining in Kazakhstan. They are really big, yeah. A big percentage of hash power is in Kazakhstan anyway. But 300 million segmented by a central bank. It doesn't mean they will invest everything, obviously, but they just said that they are considering and they're segmented about 300 million. So then they will decide.
Okay.
Super interesting,
Because Kazakhstan does a lot of mining using natural resources, doesn't it? If I remember correctly. So yeah, interesting. Yeah.
I mean, they do a lot of Bitcoin mining, a lot.
Yeah.
So this was super interesting. So I guess they're going to buy probably locally as well.
Okay. Well, that's an interesting one to finish on then. Definitely, because we're about out of time on that, aren't we? We're just coming on to the hour. So I guess this is the point where I get to say a closed call and thank everyone for coming along, and thanks everyone for the contributions and interesting stuff. And for anyone who's watching afterwards, this is not anti-money laundering advice or financial advice or anything like that. But yep, great to have everyone on board. I hope everyone enjoyed it. Be safe, beware of the sunspots, and have a great day. Bye for now.